Right now, Japan's making a huge, coordinated move, a full-on shift toward on-chain finance. If you follow crypto, you know Japan's usually pretty cautious. But with new rules, big corporate tie-ups, and some next-level tech, they're building a Web3 setup meant to actually scale. So what happens when tech giants, big banks, and regulators all squad up to basically rebuild the internet? That's exactly what we're seeing. This isn't just a handful of startups trying to shake things up. It's heavy hitters teaming up to fix Web3's fragmentation from the top down. 63 million bucks. That's the recent funding round for Startale, a major Web3 infrastructure player. And it wasn't just random VCs. The round was anchored by heavy hitters like SBI Group and Sony's Innovation Fund. That kind of backing shows institutions are betting big. This isn't a fad. Taxes used to be brutal. Crypto could be hit as miscellaneous income up to like 55%. But with recent tweaks to the Financial Instruments and Exchange Act, Japan's moving toward a 20% flat tax on spot crypto. Predictable taxes like that are basically a huge green light for big money to move in.
That said, it's not all sorted. There's a big debate about how to treat DeFi yields and staking. A lot of people say staking, where users lock tokens to help secure a network, shouldn't be taxed like pure speculative income. Startale CEO Sota Watanabe warns that if you tax core network stuff too hard, liquidity will just flow offshore. It's a tricky policy fight. Tax the mechanics of the network or tax it like traditional investment gains. All right, switch lanes. Let's talk about the backbone of this new economy, stablecoins. Take JPYC, for example, built by SBI and Startale. This isn't some random coin. It's Japan's first trust-based yen stablecoin, issued through SBI's trust structure. Because it's trust-based, it dodges the usual 1 million yen remittance cap that holds back other payment tools. They're aiming for a wider rollout around Q2 2026, which makes it actually usable for big enterprise payments and cross-border remits. Real game changer. But when corporate cash goes on-chain, transparency cuts both ways. Public blockchains show everything, not ideal for compliance or keeping trade secrets. That's where selective disclosure comes in. These privacy tools let approved parties see exactly what they need while keeping sensitive commercial data hidden. If institutions want to play at scale, this tech is a must. There's another risk. If every bank or corp issues its own stablecoin and locks users into walled gardens, we'll just recreate old banking friction. Sota Watanabe nailed it. That's the last thing anyone wants. Interoperability, letting these stablecoins connect and work together, is the only way to stop domestic liquidity from splintering. Which leads into the next big topic, building the invisible infrastructure, the under-the-hood systems that make all this seamless. Think back to old-school Web3, a pain fest. You had to babysit seed phrases, cough up random gas fees, and hop between scattered liquidity pools. Total headache. The new way. Look at the Startale app hides all that. Social login, gasless transactions, everything wrapped into one smooth super app. The secret sauce is account abstraction. Sounds nerdy, but basically it's the invisible engine that kills seed phrases and quietly handles gas for you. It's what makes a Web3 app feel like any normal phone app. Same idea continued. No seed phrases, no gas headaches, just app-like simplicity. Another big piece is ZK proofs, zero-knowledge proofs. Platforms like Superstake use this crypto trick to guarantee provable fairness in games and apps. Outcomes are unpredictable live and verifiable later. The best part? You get strong privacy and fairness without needing a PhD to follow the math. It just works. On the institutional trading side, there's Stridum, a purpose-built Layer 1 blockchain. Think of it as the highway for tokenized stocks and real-world assets. Sure, 24/7 trading is nice, but the real win is capital efficiency. Tokenized assets can be used as collateral right inside the same system, so liquidity providers can deploy capital way smarter than in old off-chain markets. We've laid out the tech and institutional layers. Now, what about regular users? Getting in is stupid simple. Because all that invisible infra is doing the heavy lifting, you don't need to be a crypto nerd to join. Sony's Sonium network is the glue. It connects the Startale app, the yen stablecoin, mini apps, and the Layer 1 rails. If each piece ran solo, it'd be chaos. Sonium makes regulated assets and public Web3 rails work together so the whole thing feels seamless. Which brings us to the fun part, play around and create. The reward guide lays out easy steps. First step, download the Startale app and log in with a normal social account. Then step 2, play daily quests in mini apps like Alka or Space Runner. Final step, earn star points. That's literally it. No private keys to write down, no complicated wallet setups, zero crypto expertise required.
Consumers are already in, earning star points, playing provably fair games on Superstake with no network fees, and lining up for the Startale card, which aims to turn on-chain value into everyday spending power. Early adopters can also mint soul-bound tokens, permanent digital badges. Sota Watanabe summed it up. The Startale app is built to remove the last barrier to Web3 adoption. Instead of forcing users to learn blockchain, they made the blockchain work smarter for users. That's the big flex from Japan. Now that the tech friction's gone, handled by invisible enterprise-grade infrastructure, the question is simple. What will you build, play, or create in this new digital economy? The foundation's set, and getting in has never been easier.